Purchasing growth stocks is undoubtedly a wise move if you intend to retire before 2027. Suppose you choose to purchase Tesla stock. How many shares exactly would you require? Although Tesla's profits are unpredictable, it's difficult to deny that the company's growth earnings have consistently exceeded forecasts. Find out how much you would need to retire on Tesla shares by watching today's video, where we'll be performing the math using expert methodologies and data. Planning-wise, the final 5 years before retiring can be the most important, since you have to determine if you can actually afford to take a break from work during that period. The decision will be heavily influenced by the amount of preparation that has already been done, as well as the outcomes of that preparation. One of the main causes of post-retirement financial hardship for many individuals is a poor retirement needs analysis. A retirement needs analysis could be as easy as multiplying their current income by a suggested percentage, such 75 or 80% at its most basic. And this is based on the assumption that, unlike in the United States, spending will probably decline after. Employers have been reducing their preference for offering their employees employer-sponsored retirement plans, such as 401 plans, through a variety of strategies in the past few years. Investing in one or more funds is an option available to you. Mutual funds comprise the majority of the options. These include index funds, bond funds, offshore funds, large cap and small cap funds, and real estate funds, among others. They usually cover a wide range from conservative income funds to aggressive growth funds. Buying aggressive growth stocks is a popular strategy among investors looking to provide themselves with a sizable retirement fund. Even though they are unstable and dangerous, we think the profits when they succeed more than make up for the risk. Investment in businesses that have outpaced industry earnings growth is referred to as growth stock investment. These companies are now seeing phenomenal sales and profit growth. Here's where Tesla becomes relevant. At the moment, the stock is trading at roughly $1,000. Since it's a growth stock, it's highly improbable that it will remain at $1,000 for the next 5 years, but for the sake of this video, let's assume that it does. The average monthly cost of costs for American households is $5,000. According to the U.S. Bureau of Labor and Statistics' most current consumer expenditure survey, that's approximately $62,000 a year. Experts advise saving 25 times your annual cost before retiring. Based on the 4% guideline, we now have almost $1,500,000 from our yearly $62,000. Consequently, in order to retire within the next 5 years, you would require roughly 1,500 Tesla shares. Nevertheless, the figure drops even further, and your final sum in dollars rises when compound interest and growth rates are taken into account. Since its founding, Tesla's stock has increased dramatically over the past 10 years, reaching a 1,000% rise. It's a decade's growth stock, if you will. And despite the fact that doubters think the company's several well-established auto competitors may have caused the stock price to plateau, the company's past performance and its plans for the future point to the contrary. If Tesla's robust and steady EPS growth trend holds, the stock might reach 2,500 or even higher by the end of the decade. That would give you an additional 250% or around 3,750,000. These stock price projections may be criticized by certain market players as being unduly optimistic. But given the history of the business and Elon Musk's astute leadership, the projections may be modest. The first day of Tesla's public offering was June 29, 2010. 13.3 million shares were made available by Tesla on the NASDAQ at $17 a share. In total, it raised just over $226 million. After going public in 2010, Tesla's stock price stayed mostly stable for a number of years. When the company was selling just one vehicle, the first Roadster became dangerously close to going out of business in 2008. At this point, Elon Musk and his team's goal was to keep the lights on long enough to introduce the Model S sedan, the company's first entirely designed vehicle, in 2012 as part of the run-up to the IPO and afterwards. The Motor Trend awarded the Model, the 2013 car of the year, finally happened, and Tesla's stock price shot up. One might potentially earn a return of up to 1,000 if they continued to hold Tesla equities after the first public offering. Despite its risks, Tesla is an excellent investment for the future today. As part of their brand principles, they have made quality and safety a priority, and we think they will thrive. By the end of 2020, Tesla had $7.07 billion in cash on hand, and by 2025, It was expected to have 24.6 billion. This is responsible for some of the most striking increases in cash flow and sales profitability of any business, not just automakers. A bright future is indicated by Tesla's intentions to increase deliveries from 500K in 2020 to about 4 million by 2026. It's a big step forward, even though this is still roughly 60 less than what manufacturers like Toyota and Volkswagen are supposed to supply. However, bullish catalysts are still widely available. Tesla's stock price rebounded as the recently inaugurated Gigafactory celebrated its first delivery on March 22. Shares have recovered most of the losses from the first 10 weeks of the year with a sharp increase in price in less than 3 weeks. With 2 more facilities up and running, it is anticipated that Tesla sales will rise even further. With the recent opening of its Gigafactory in Austin, Texas, Tesla took a big step towards realizing its long-standing goal of starting to produce its electric Cybertruck. Elon Musk recently had a conversation with Chris Anderson, the head of TED, during which he expressed his enthusiasm and goals for the electric car company. The day before the Giga Texas event, Anderson said he conducted an interview with Elon Musk as well, just in case the latter couldn't make it to the TED lecture. After describing his experience at Giga Texas and emphasizing how amazing the machine that makes the machine is, Anderson gave a little sneak peek at an 8-minute clip. What I witnessed there was really incredible. Anderson said straight up, according to Elon Musk, the man behind the renowned machine that creates machines, producing an electric car alone won't be enough to ensure a sustainable future. What's really needed is a system that can produce a high volume of electric vehicles at a profit, enabling the company to finance further growth. Analysts predict that Tesla will post strong first quarter earnings and revenue in the upcoming fiscal year 2022. According to Ives, Tesla should attain a run rate of about 2 million vehicles by the end of December. Tesla sold 936,000 vehicles in 2021, and even if the company won't reach its target for the full year 2022, the fourth quarter sales increased the year-end run rate to approximately 1.2 million. It is anticipated that adjusted EPS will rise by 148, causing year-over-year growth, which is quicker than the previous quarter, but slower than the previous year. It is anticipated that revenue growth will increase to 72.8% on an annual basis. Analysts project adjusted EPS to increase by 67.7% for the whole fiscal year 2022, which represents a significant decline from the robust growth of the prior year. By 2030, the market capitalization of Tesla shares would increase from slightly over $1 to $10 trillion, predicts analyst Pierre Ferragio of New Street Research. The analyst claims that Tesla's growth story is beginning to take hold and that the company is headed for previously unheard of levels of growth, including a 20% market share. Ferragio, on the other hand, emphasized that investors should make their own decisions, and that his opinion is neither a forecast nor investment advice. According to analyst projections, there will be 20 million car sales in 2030 at an average selling price of $35,000 or $700 million in sales. This true AI, adding option value, the estimated contributions from the insurance industry will be $1.5 billion, fully autonomous software between $35 and $70 billion, and the energy sector, $250 billion. Things are looking great for Tesla, the automaker that has managed to have the entire world at its feet, regardless of what the future holds. Elon Musk transformed the industry and led the business to its current state. It's hard to lose money betting on one of the wealthiest and sharpest guys on the planet, who possesses unquestionably the greatest industrial knowledge of any living person. Naturally, regardless of how promising the prospects seem, investing carries some risk. Therefore, the actual amount invested is determined by an individual's ability and personal financial projections. The quantity of Tesla shares required to retire affluent varies according on a person's background, income, expected lifestyle, and other considerations. There is no one-size-fits-all amount. Based on your yearly income requirements, how much would you invest in Tesla if you intended to retire in a few years? Please leave a comment below.